Hi, this is Grant of Fortuity Risk Analytics. So here we have a chart of net speculative positions in oil WTI. As you can see, they're the second highest in this 5-year chart. In fact, they're actually the highest in 30 years. Back in late January, early February, when oil was about $26 a barrel, you couldn't give away oil stocks. In fact, back in January and February when oil was $26 a barrel, it was cheaper to buy 500 milliliters of water versus 500 milliliters of oil. Now, after the 100% run-up, investors are giddy about oil, and they're piling on the longs. As you can see in this chart on the far right where this green bubble is, we've seen net speculative positions go parabolic. So in this chart here, we have the price of oil in green versus the dollar in white. Since all commodities are traded in dollars, usually when the dollar goes higher, commodities will go lower and vice versa. Over the last few months, we've seen the dollar push higher in this white line here, and oil's actually gone higher too. This type of correlation shouldn't last. So we think over the next few months either oil is going to pull back or the dollar is going to pull back. And with spec positions, the second highest in 30 years is probably going to be oil. We think that there's a higher probability of oil hitting 35 before 55 in the next 6 months plus. Something has to give. This is a far too crowded trade. This has been Grant of Fortuity Risk Analytics.